But Stephanie, do you want to talk to us give us a sort of brief background to the task force and the work you've been doing over the last year, bunkered down with all the members to try and figure out what's going on here?
Yes, sure. So we have actually been working on quite an aggressive timeline. So the task force had a year to work with. It was set up by the Financial Stability Board at the request of the G20 a year ago, and then set out to work to develop recommendations for voluntary climate-related financial disclosure, and all with the aim of getting better information into the market, into financial decisions, and to provide information on the concentration of carbon-related risks in the financial sector. The task force has 31 members from across the G20, also representing many different sectors. And it's, I think, unique in that it's private sector led and focusing on the impact of climate change on companies rather than the reverse. And really working hard over the past year to develop recommendations, disclosure recommendations. So as Hugh mentioned, these recommendations and a report is due out next Wednesday, December 14th, for public release. And at that time, the recommendations will come out for a public consultation period for 60 days. And so really invite broad participation in that consultation.
Just taking a step back, Stephanie, what was for those who may not have followed this closely, what was the problem that you were looking to resolve, and what was the remit that you were given to try to think around that problem over the last year, which I know has been hugely intense. There's a big body of work that's been done here.
Yeah, so the problem identified was that there was a lack of climate-related financial information out there, and that information is needed so that there can be better financial decisions, investment decisions, capital allocation decisions, and a better understanding of the concentration of climate-related risks. And all of that is to avoid basically a surprise that there's undisclosed climate risks and opportunities, and to avoid impact on financial stability. And hence that's why it's Mark Carney and the Financial Stability Board that set up this task force.
Okay. And I know it's always difficult talking about a report before it's been released, but can you maybe tell us everything that's in it, actually. No, can you allude to, can you maybe allude a bit to some of the areas of recommendation that are going to be focused on, give a flavour for where it's going, and then tell us everything that's in it?
Okay, I'll tell you everything next week. There are 4 areas of recommendation, and they are governance, strategy, risk management, and metrics and targets. So the governance sections or recommendations are about what boards should do in their oversight function over climate-related risks and opportunities, and then in turn what management does to identify those risks, assess those risks, and manage them, and what the accountabilities are there. And then there's another section of recommendations around strategy. So what's the impact on the business lines, strategy, financial planning. And then there are recommendations around risk management. So what is management doing to manage climate-related risks and opportunities? So describing that. And then also, then the 4th bucket is metrics and targets. And that's basically to put some quantitative measures around what the other elements of strategy and risk.
Okay. And are there any areas within that you've been pleasantly surprised or found difficult? Are there kind of things there that you've tried to evolve but found harder than others? Or?
Yeah, I think one area that is in the recommendations that I think is challenging is scenario analysis. So under the strategy recommendations, there is a recommendation that companies present a 2-degree scenario. And so I think a lot of companies have not done scenarios before, don't have currently the resources or the know-how to do it. And so I think that's an example of really a stretch recommendation. We've tried to really balance stretch goals, but then also practicality. So I think that's also been a challenge to get that balance right. And I think that was really highlighted by the discussions we had around scenario analysis.
That seems to be one of the things that's coming out from people. A lot of this is going to be based on scenario analysis using data, kind of projecting forward, giving an idea of where companies are over a time frame.
Yeah, I think you've raised a good aspect to discuss, and that's that so much of this is forward-looking, which I think is appropriate because obviously risks are forward-looking. And so to get disclosure about what the plans are for the future, how the risks might unfold in the future, what are the obligations going forward around climate change versus what we've done in the last year.
Okay. And one of the interesting developments that I found over the year has been that the remit sort of broadened out somewhat from just a corporate focus to be looking much more at the investor side of things. I think that was announced in the sort of preliminary findings. How are you sort of looking at a sort of sector approach to what might happen here? And can you talk a little bit about what might be expected there, obviously without revealing the secrets of the report yet?
Okay, I'll do my best. So the recommendations are intended to apply across all sectors. So that does include the financial sector. So that's banks, insurers, asset owners, and asset managers. So the financial sector is not left out. And that puts the financial sector, say asset owners, in the position of being both users and preparers of this information. So I think that's notable. And then as well, that the recommendations are intended to apply across all other sectors. The recommendations are such that there are the recommendations, then there's guidance intended to apply across all sectors. And then for some sectors, there will be supplemental guidance, and that's where a sector might be considered to be more highly impacted by climate change. And so, but overall, the recommendations apply across the board to all sectors.
Okay. And in terms of the work you've been doing, what has always been in your mind about the outcomes that the task force wants to see? What is it that you hope to change, and how do you hope to change those aspects?
I think the main thing is to get widespread adoption. That's our hope, our goal. So as I mentioned, we're trying to balance the stretch goals versus practicality, and then having broad outreach to get input and to bring people into the process. And so that's the obvious outcome that we're looking for is widespread adoption, so that there's better information out there and we can all make better decisions as a result. So that's the main goal, I would say.
Okay, and I remember a while back there were these stats that were put out. There are 300 organisations that are collecting climate data. Can you sort of say what you hope the report might mean for some sort of homogeneity in the way that climate data is collected and reported? Is that?
Yeah, so I think the key differentiator here for these recommendations is that they're meant for mainstream financial reporting. So in the regular financial reporting that a company does, and that means all the processes behind it as well. So not, obviously to put something in an annual report, there's a whole process, a governance process and other processes around that. So to firmly place this disclosure within the regular financial reporting, I think that distinguishes it. Through the process, through the past year, we've had reference to all the very good work that's already been done on climate-related disclosures and other climate-related risks and opportunities facing companies across sectors. So we've had reference to all of that work, and then this is intended to be a framework for the mainstream financial reporting.
But to be clear, it's going to be voluntary.
Yes.
So what do you feel the change mechanism will be there? That peer pressure will apply, or that you'll have a sort of business case being put forward by different companies?
I think the change will come, I think, from a growing recognition that there are material climate change risks and opportunities, and companies are already under an obligation to disclose material risks and opportunities of any kind. And so I think the impetus for change is around that, and then providing a framework, an accessible framework for companies to have reference to in order to do that. I think there's uncertainty. I think the processes and the disclosure hasn't developed fully, and so to drive that development towards having this disclosure in the mainstream reporting.
Right. And are there, is there a sort of a roadmap forward for what the next steps might be? I mean, or do you all finish after 60 days and then?
Well, there will be the consultation period for 60 days starting in mid-December, so next week. And then obviously we'll have regard to that feedback and then present the final report to the FSB in the second quarter of 2017. And then the report will be presented to the G20 in July. And there's no specific remit of the task force at this time beyond that. The framework that we've developed is intended to be flexible enough to live on, so that when, as we hope, there's further development around climate change reporting and the underlying processes, that this framework will stand the test of time and remain something that companies can use in order to do their reporting and everything that goes before that reporting.
Okay, great. Thanks for that, Stephanie. Okay, we've got time for questions. If you can think of any questions that are clever enough to fool Stephanie into revealing everything that's in the report, try your best. We've got two there. One, if we get a mic down the front, actually we'll try and keep your hands up so we can get the mics to you. Let's take the one at the back because that gent's closest, and then we'll get the two mics here. Name, company, and question as quickly as possible, please. The mic is just about to come on now.
It's on now.
Speak into the mic.
My name is Tom Manning from the NYU Center for Sustainable Business. I was wondering if you could differentiate the work of the task force from, say, the work of SASB, GRI, integrated reporting, et cetera.
Yeah, so we have looked at all of the reporting frameworks out there. There are actually over 400 in the world. And obviously we focused our attention on a few, including the ones you've mentioned, and did look at a gap analysis. So we've had reference to those frameworks. For example, SASB, I mean, the core framework there depends on around materiality. So we had a lot of discussions about what that means in this context, and we had to look at CDP, the GRI, and all of that, and we mapped what we're recommending to those other frameworks. And so we've drawn on those frameworks, and yet tried to bring them together, plus our own thinking and our own work, into a singular framework for mainstream financial reporting. So it has been part of our process to look at those other frameworks and look at the gaps and the excellent work and product of those frameworks.
Okay, great. Thanks for that. Question over there. Name and company and question as quickly as possible.
Doug Hogan from MSCI. There we go. Doug Hogan from MSCI. My question has to do with if you're providing guidance with respect to asset classes, and in particular, the asset class of infrastructure. In this country in particular, of course, there's going to be a lot of focus on that in the next 4 years, 8 years. with respect to what kind of infrastructure will we build out with respect to rail lines, pipelines, transmission lines, highway networks, mass transit networks. Obviously, big climate implications potentially from that. Is there specific guidance with respect to those types of investments and how that should be reported within this framework?
Well, as I mentioned, and I'll repeat, it is a framework designed across all sectors. But I hear your question in that there is a challenge for one framework to apply across all sectors and across all asset classes. And we have had many discussions about that at the task force, that making this, we need to make this framework applicable not only across sectors but also asset classes. And so it does apply to infrastructure, or can be applied to the infrastructure asset class as well as many others. I think it's in some ways simplest for some kind of operating company that's a reporting issuer. It's probably an easier job to map to that, but it does cover all sectors and all asset classes.
Great, thanks. Question here at the front.
From 427 Climate Solutions. I'm just curious how you handled the harmonization of regulatory, the sort of questions that would come up from the differences among regulatory frameworks globally, and especially as they apply to securities law.
Yes. The task force is a private sector-led initiative, and we purposely did not pursue a mandate around regulation. And so our recommendations are developed by the private sector for the private sector and across all sectors. And so it could be that regulators might have reference at some point to these recommendations, but it wasn't our focus or our mandate. So it's really up to regulators and lawmakers as to what they want to do, if anything, with these recommendations. We did look at the regulatory framework for climate change reporting as one input, but it wasn't our focus.
Do you get a sense of the appetite from regulators and lawmakers to row in behind something like this?
I think that different regulators in different parts of the world are looking at this issue, but I really can't speak to the interest of regulators in this, because, as I mentioned, it really hasn't been our focus.
Sure. Yeah, I guess in some sense it gives a globalized solution to a problem that they may have that can be picked off locally, so it could be interesting. Mm-hmm. All right, great. Question in the back now.
Hi, Graham Sinclair at ESG Architect. Thank you very much for sharing your insights with us. I have a question on the content and a question on the distribution. When it comes to the content, in your role as Head of Sustainable Investing in Canada, this particular project is focused on climate disclosure. So I think some of the messaging, for example, that Steve Waygood offered at COP22 was to kind of dial down some of the expectations on what's actually going to be in the report. I guess it's easiest if you just explain what's in the report for us, but if you can't do that, if you could just help us on that subtlety, if at all. And then on the distribution side, short of getting Taylor Swift to do a rock concert like they did with the US Grand Prix to promote it, how are you going to look to distribute this message and get it out there? Thank you.
I'm actually not sure I understood your first question. Could you repeat it?
So it's all about mandate, and Hugh was asking you earlier. The task force was given a specific mandate, and the words, the definition is climate disclosure, not sustainability disclosure. So there are going to be some sustainable investment practitioners who think some ESG issues could be in there, but they may not be. So how did you deal with the kind of narrowing? This is a climate issue, not a sustainability issue. Did that come up, and how did that help you clarify what exactly the report's going to come out with?
Yeah. We were very careful throughout the process to always stick to our mandate. So it was a broad enough mandate as it is. So we did exclusively focus on climate change, and really also the part about climate change being that we were looking at the impact of climate on companies rather than the reverse. So to that extent, it's somewhat neutral on climate change. And so we were just very, very keen to stick to our mandate, and it was a regular part of our discussions, clarifying that mandate, coming back to it, having the discipline to maintain a focus on our mandate was very important. We didn't have a lot of time to work with. 1 year is not a lot of time. And so it was very important to stick to that mandate. And then in terms of your second question on the public release, we've been doing a lot of efforts, bilateral calls, events, webinars, reached thousands of people through those processes. And so, so with this public consultation, we're hoping to draw on the interest that we've already got in this process, and hope that ultimately we'll get that adoption. But we're not planning a rock concert or Taylor Swift, although that would be fun, but not in the plan.
Obviously, you have to keep the Leonardo DiCaprio plans under wraps for the moment, but we'll see next week. I know there's a number of events happening around the world, actually. I saw there's definitely one in Paris, one in London, I think. Probably
so we'll continue events, certainly.
Okay, so a series of report releases effectively next week. I mean, how is that being coordinated in terms of if people want to go to the press conference or the release of the report? There's a number of events being done?
There is an event in London next week, and it's with the Taskforce members and then the chief executive officers of those companies, or chief financial officers, wanting to get, obviously, interest from those groups, and then the media, but then there will be other events planned after that.
Okay. And let's take a quick question there from the gent in the middle who's bursting with questions today.
Thank you. Ellie Levin from Impact Capitalist. Question unrelated specifically to this topic, but relevant for you as kind of your role of head of sustainable investing at CPPIB. As a fellow Canadian, I'm curious, how far do you foresee kind of our big pension fund, CPPIB, OMERS, Ontario Teachers Pension Plan, from adopting impact investing as a potential asset class? And when I say impact investing, I mean...
I cut you off there. It's so unrelated, unless Stephanie wants to take it, but... kind of a bit off topic, but Steph, you doing much on?
Yeah, like I'll kind of go back to my other comment. I kind of like to stay focused on the mandate of the task force.
Fair enough. Okay. Any last questions before we wrap up? Just the website is obviously available for people to go and take a look at the work you've done to date. The report will then come out and be open for consultation. What kind of input can then, so that's anyone can then respond to that, or
yes.
Are you looking for organisations to respond?
Yeah, anyone can respond.
Okay. And within a 60-day time frame. So obviously time is of the essence, and encouraging organisations to respond to that in as broad a way as possible is definitely something that everyone in this room should be looking to do and promote with other actors in the financial markets. It's great that Stephanie has been here. It's always difficult talking ahead of a report, and she's been very game in doing so. So if we could show our appreciation to her for being here this afternoon. Thanks very much. Thank you, Steve.